Yo, what up, man? Profit Gang, you already know what it is. FTSTW from the streets to Wall Street. And yeah, I just want to welcome you guys to a brand new video. Following up from the last video that I did, in this particular video, I'm going to be giving you guys top-down analysis on a couple of pairs, things that you guys can look out for the week that's coming ahead. In the last video, I broke down my first trade of the year, gave you guys my exact trading plan, gave you guys my exact trading system, the thought process that I go through when I'm analyzing the market from top to bottom. Now, if you don't know who I am, my name is Glory, and I've been a profitable trader for about 3 years, and I'm trying to give out knowledge to people who are struggling with understanding how to trade the financial market. Now, there are two sides to trading: the technical part, the psychological part. I want to believe that with the videos that I'm putting out here, I'm going to help a lot of people in understanding how technical analysis is supposed to be done. If you practice the things that I'm going to be teaching in these videos, you're going to elevate your trading in the year 2026. So I'm going to be talking about Bitcoin. I want you guys to watch the video till the very end if you want to get the most out of this video. I'll be talking about EURUSD, I'll be talking about GBPUSD as well, depending on how long I want the video to be. If you're new to the channel, I want you to subscribe to the channel because there are a lot more of these videos that are going to be coming your way. Without any further ado, let's jump into the charts, man. Let's have some fun. Let's go. I want to believe you guys can see my screen right now, so I'll be diving straight into the markup. So on BTC right now, we can see that long term we are bullish on BTC. If I zoom out and you look at the price action from a more macro perspective, okay, if you look at the price action from a more macro perspective, what you can see on BTC going on is the fact that we are, from these lows here, we seem to be pushing higher. Okay, we're breaking highs. We have a higher high, we have a higher low, and we have a higher high. Now, the market seems to have bounced off of this level here, just like I marked out there. But at the same time, we have a short-term trend going on here. Okay, and regardless of the fact that the market can spring up to the upside and create a brand new high, which is going to be a new all-time high, it's very much possible based off of the probability of market structure that the market can follow, this downtrend, which is low, high, low, high, and low. Okay, the market can react off of this and we can push to the downside. Now, that's only a possibility. Now, what am I trying to say? What I'm trying to say is the market is both bullish and bearish at the same time, and it depends on where you're looking from and what perspective you're taking. Okay, if you already have a bullish bias, then you're obviously looking for buys alone. But if you have a bearish bias, then obviously you're obviously looking for sales alone. But the way you should be looking at the market is from both sides, because the market is moving from demand to supply and from supply to demand. So the market has left demand, okay, around here. The market has left demand. Where are the next supply levels that the market can interact with if we're going to have a break to the downside? So all of this that I'm saying is basically me trying to build a storyline of what I see in the market. And building your storyline is very, very important because your storyline helps you to navigate the market. And of course, it helps you to be patient. It helps you to wait for the market to get to areas where you want the market to get to before you execute trades. And of course, you have to do some form of top-down analysis, which I'm doing right now. Okay, so basically what I'm seeing here is a market that could be, there's a huge possibility of the market selling based on the price action that I'm seeing. Now, don't get me wrong. The market has already reacted from these levels here. Okay, the market already reacted from these levels here, and we can definitely expect a new all-time high to be created at the end of the day. But mind you, this is something that could take a lot of time. I mean, relatively a lot of time, okay, because a lot of time is different from person to person, okay? So this is something that could take a little bit of time. I'm talking about days, weeks, or maybe even months, all right? So with that in mind, we know there are levels that can stop price from even reaching the all-time high. And how do we detect these levels? We use market structure. So again, I like to use the part 2 just to show you exactly what I'm seeing in the market. So I'm seeing a high, I'm seeing a low, I'm seeing a lower high. This broke structure to the downside here, creating a lower low. The market pulled back, and then we have a brand new lower low. Now, based off of this alone, okay, I'm going to change the color of this to black just so we can differentiate external structure from internal structure and things of that nature. Okay, so I'll change the color of this to black. I want it to be visible on the daily time frame and below. Okay, so I'm going to leave that there and I'm going to lock it in right here. Okay, so based off of this alone, we have a supply level around here. Now, mind you, we have more internal structure at these levels here. So the level from this high to this low, if you zoom in a little bit further, you can see we have internal structure, okay, coming from this high. We have this here as a low, we have this here as a high, and we have this here as a low. And this is in fact the level where the market interacted with and caused it to drop to the downside. We have this other block here that is still unmitigated. So there's a very high chance that the market could also push for this other block as well, meaning that we have multiple supply levels, okay? Now, looking at this, I can see three supply levels. One at the breaker, which is marked higher time frame breaker around here. Now, this is marked higher time frame breaker because I'm getting this from the higher time frame. Okay, the daily time frame is a higher time frame. So upon getting this from the higher time frame, I mark this out to be a higher time frame breaker. It's as simple as that. And this is your higher time frame supply level. In this case, the daily time frame. And how did I get this? I used this engulfing candle. Okay, so this is one concept that I borrowed from retail traders. Typically, I want to mark the last bullish candle as my order block, but I'm taking this as, the engulfing as the supply level. Okay, I also have this supply level around here as well. So we have these three levels where we're expecting the market to get to on the higher time frame, guys. On the higher time frame. Okay, so dropping down to lower time frames on the 4-hour time frame, we want to see which levels on the 4-hour time frame are aligned with these levels on the daily time frame. That alignment is very important because this tells us that both time frames are saying the same thing, right? We want levels on the daily time frame to be saying sells, while levels on the 4-hour time frame to be saying sells as well. So basically, multiple different time frames are telling us to take the same action from the same exact level. It's as simple as that. So on the 4-hour time frame, coming back to the breaker level, we have this 4-hour order block that has not been mitigated. Now, you don't have to be shy about stretching out the market because you want to see your levels very, very clearly. Now, on the 4-hour time frame, around this area here, you can see there was something like a base drop coming from this high here. So if I'm going to mark out my structural level, it's going to be from this high. We have this here as a low. The market pulled back up, creating a high, and then we had a break of structure to the downside. Now, this break of structure is aligned with the higher time frame breaker gotten from the higher time frame, which is the daily time frame, and we have a 4-hour order block there. So simply put, the 4-hour time frame is agreeing with the daily time frame that there's something there that we should look to be selling from. All right, so that's one level on the 4-hour time frame. Now, remember the other level on the daily order block, which is a little bit higher. That's the level around there. Now, on the 4-hour time frame, again, there is an internal break of structure around that area there. Okay, you want to keep it simple. You want to keep it very sharp. You don't want to confuse yourself. You want to look at levels that are aligned with higher time frame levels, and that's just it. So this is an internal break of structure, which will mean that this would be an order block on the 4-hour time frame. Now, this is what I'm going to do. I'm going to split my screen. So I want you to be seeing the daily time frame on one hand, and I want you to be seeing the 4-hour time frame on the other. Okay, so you can see where the alignments are coming from. All right. So this is our daily breaker, and this is the 4-hour order block that's aligned with the daily breaker. You can see how the market came very, very close to the order block. Now, it didn't really pierce into the order block very well as we would love to see, but it came very, very close. And of course, you could have had a trade opportunity from there. But again, based on the fact that I'm a very, very rule-based trader, I want the market to pierce into the order block, or I want price rather to pierce into the order block. And I get to see my change of character from there, and I'm going to be taking my trade from there. Now, typically, your trade is going to look something like this. Okay, typically, your trade is going to look something like this. Let's assume we have something that looks like this, we pierce into the order block, maybe reject, and then we have a change of character. This is the trade model that we are going to be taking, okay? We want the market to pierce into the supply level and, of course, change character as a result of a reaction from the supply level. So That's going to be the setup right there. Now, once you have all these levels, it's only a matter of narrowing down these levels on lower time frames. Okay, so you want to refine your higher time frame levels down to lower time frames where you're going to be having less risk and more reward. Okay, so that's what we're going to do right now. And I want to believe I can open this up a little bit so we know where exactly everything is coming from. All right. So, all right. So we have our breaker level, we have our daily supply level, and we have another daily supply level or a couple of other daily supply levels. Now, the idea is the fact that the market is going to interact with this first, and it's possible that this can just make the market drop. So we drop to the 4 hour time frame. And on the 4 hour time frame, we can see again the market came very close to the supply level, but it didn't really tap it in. So we're still waiting if there's going to be maybe another sell from there. But however, we can still look at maybe the 1 hour time frame if we can find some trade opportunities. Okay. Now on the 1 hour time frame, like I said, I wouldn't want to be selling just yet because it interacted with the order blocks. All right. The market hasn't really interacted with the other blocks. So I really wouldn't be looking to take a trade right now. But again, based off of what I can see right now, there could be a trade idea that exists somewhere around here. Okay, somewhere around here. There could be a trade idea that exists somewhere around there. Okay. All right. Yeah, so somewhere around there. Now, if this particular trade here fails, then obviously the market is going to come into this. Now, if the market is going to go into that, let's now refine that level. Now, on the 1 hour time frame, we can refine the level for that to, this particular area here. Now I'm picking this candle just because this is my 1 hour break of structure. Okay. And of course, the market never really came back to mitigate these candles here. Now I have this candle on the 1 hour time frame. And on the daily order block, which is higher, we can see the daily order block. We can see the 4 hour order block within the daily order block. And now we can see the 1 hour order block within the 4 hour order block within the daily order block. So simply put, our trade idea, if we're going to be taking based off of like risk entries, okay, our trade idea is going to be coming from this area here. Okay, so pay attention to the numbers, okay, because these are basically your entry criteria or your entry parameters, okay. So this can be a trade idea. And if we're taking this, long-term targets will be, to create a new low. I don't want to get into why we're going to be targeting that as long-term targets, but you can target, 1:3, 1:5, and things of that nature. I believe a 1:3 trade here would be ideal because even if this is bullish, we can still expect it to pull back before, we have other buys. All right. So that could be your trade as a day trader right there. Another area where you can take a sell from is this area right here. Now, mind you, these are risk entry type trades. So these are not confirmation based trades. So if you want to wait for confirmation, you can as well wait for the market to get to these levels. You want to see a change of character as I described earlier, and then you want to take the trade. Okay. You don't want to jump in on risk entry if you are not certain that you're ready to risk your money, because at the end of the day, trading is about risking your money. Okay. So if you're not ready to risk your money just yet, then you can wait to see confirmation. But again, if you are a more aggressive trader, you can take these off of risk entry, and these are the entry parameters, okay? So these are your entry parameters. You can see the entry parameters here. You can pause the video and check out the entry parameters here. You can as well pause the video and check out the entry parameters here. This is your take profits. This is your entry, the black one, and the red one there is your stop loss. All right. So that's my top-down analysis on BTC USD. And again, if you trade like me and you understand the way I trade smart money concept, market structure, and things of that nature, then you would know why all of these were marked out. Okay, now this is to show that I've been tracking BTC price for a very long time. So all of these purple levels are levels where the market could possibly sell from. So this level is the first one, and this one being the second. So during the week, we're going to see how the market develops. All right, so I'm going to go back to the daily time frame and I'll quickly touch on Euro USD and GBP USD as well. Ethereum is kind of like, the same price action, but on Ethereum, let me see what we have on Ethereum. Again, price can literally just go ahead and give us a brand new all-time high. But at the same time, we're looking for supply levels where we have possibilities of selling. Okay, so we have similar price action on Ethereum. I can see a very bold level of liquidity above this high. Okay, I can see a very bold level of liquidity above this high, and that would mean that the market might be targeting this level of supply around here. So this would be my daily supply level, or maybe even supply levels around here. Okay, that's also a supply level. Okay, because right now the market looks pretty bullish right now. Okay, the market hit this as a supply level, but it failed to go down to create a brand new low. And of course, it's coming back. Now, this high, it definitely might be taken out because, of course, the market doesn't really use a single level of supply multiple times. Okay, this is, for retail traders, this could be a support level, but for us smart money traders, I want to see this as liquidity, especially when I start to go down to the 4 hour time frame, okay, and seeing that there might be some levels up there that might be unmitigated. All right. Okay, there could be some levels up here that might be unmitigated. So the market can definitely pierce through, taking this out as liquidity and going lower. All right. But anyways, this is Euro USD, and I want to go back to the daily time frame. Okay, daily time frame on Euro USD. Now, following from last week's video, of course, you guys know I was selling Euro USD, and of course, the market hit the target that I was expecting it to hit. And now, what can we expect? What can we expect from Euro USD? The price action looks so ugly right now, honestly, because we are in this massive range on the daily time frame. You can see how, massive sideways movement of the market here on the daily time frame. However, you can follow immediate price action because it looks like the market might be targeting this level of demand around here. So it looks like, we can follow immediate price action. And from what I'm seeing here, I can see a clear downtrend on the immediate price action. So that's a low, high, low, high, low, high, low, high. And of course, we have a break of structure to the downside. Now, we can simply expect this to pull back to the upside and keep selling to the downside, at least until we get to this. But of course, we want to check in here because I can see that I have a long wick here. And this might be looking like a week on the daily time frame. However, it could be something else on a lower time frame, such as maybe the 8 hour time frame or the 4 hour time frame. So firstly, I'm going to go to the 8 hour time frame to see if there's anything there that could make the market run into a buy. Now, looking at this, I have this demand level on the 8 hour time frame. Okay, and it's looking like the market has interacted with that demand level. So there may be some reactionary buys from that level there. But again, I want to, I want to bet more on the selling side of things because the market looks to be aggressively selling. And of course, when you look at the market from a more macro perspective on the higher time frame, it's looking as though the final target for the sales are these levels here, or maybe even these levels here. So I want to look for more of sales, but I might want to wait until the week opens for price action to develop. But just going off of me marking levels here, okay, if I'm just going to mark a level here, I believe the market might get to. Already the market has used this breaker level here, okay? and it never really got into these levels around here. So this level here, the market never really got into these levels here. So on the 8 hour time frame, that could be a level where the market can pull back to that level, maybe during the week, maybe next week. I don't know when this can happen. Very, very uncertain in the market. So yeah, the market can do that. And on the 1 hour time frame, okay, on the 1 hour time frame, exactly. So we can have a level there on the 1 hour time frame where we can expect the market to come to this level and sell off from that level there. But again, like I said, I want to wait until the market opens so we can see how the market develops. But then again, if you compare the price action from the last video that I did and with this video right now, you can see how much price has developed to the downside. In that video, I broke down some sales coming from these highs here. So you can see how the market has developed to the downside, and you can see as well how my markups are being represented in the market. Okay, so again, I know this is looking very, very messy, but you need to train your eyes to see what I see. And yeah, you definitely understand what I'm doing here. So, like I said, the market can pull back into these levels here. Okay, maybe not necessarily from this low because I don't know how the market is going to open. All right, but we can expect the market to pull back here and expect it to sell back to the downside. All right. Again, the market has to open for the market to develop a little bit more. I think this video is more so about the BTC analysis than anything else. But again, yeah, that's Euro USD. On GBP USD, I'm giving you guys higher time frame views. I'm giving you guys higher time frame perspectives. And of course, if you go through my other videos, you know exactly how I trade. You know exactly how my lower time frame confirmations look like. So you know how to catch these trades when they get to your higher time frame levels. All right. So let's wait for the charts to load. GBP USD. This is mad bearish right now. So last week, I was expecting the market to kind of sweep these highs into this order block, but the market had other plans. Okay. So probability states that anything can happen in the markets. And of course, in the case of GBP USD, right, this finally served as a change of character right here. Okay, so this area here served as a change of character. You can see how the market pulled back into some supply areas around here. And of course, there was a sell-off. Now, typically, the market did not react from the 4 hour supply level. Now, this is why you want to do some type of multi-time frame analysis. I like to use the 8 hour sometimes because when you use the 8 hour, it corrects a little bit of how do I put it? What's the word I'm looking for? It makes you see a broader area basically. So on the 8 hour time frame, we had this. And if I would have seen this on the 8 hour time frame, I would definitely would have considered taking that trade. But I held my guns there because the market never reacted from my level. Again, you want to see alignment between higher time frame and lower time frame. So I'm going to divide my screen once again. I will leave the 8 hour time frame on this side. And on this side, let's go to the 1 hour time frame. Okay, now on the 1 hour time frame, we can see more internal structure. Now, mind you, I'm talking about this area right here. Okay, on the 1 hour time frame, you can see there was obviously more internal structure that suggested that the market was never really going to come into that area anymore, right? So there was this high, there was a high right here. So there was this high, there was this low, there was this high, and then the market broke to the downside, failing to ever come back there. So as soon as the market came back, after all of this has been done, so after all of this, as soon as the market got back there, there was an initial reaction. The market pierced back in once again. And of course, there was a change of character. Okay, so when the market came right down here, internal structure now created this as an order block. So that's your risk entry and confirmation entry playing out right there. So this first entry probably would have been your risk entry, and this would have been your confirmation entry. So you can backtest this on GBP USD whenever it feels convenient for you. But again, I'm trying to look for what's going to happen in current markets right now. So let's go back to the daily time frame. And on the daily time frame, I want to believe we can all see this together. Okay, so there's this very, very obvious order block right here, or supply level, depending on what you choose to call it. Okay, so there's a supply level right there on the daily time frame. So this is daily supply coming down to the 4-hour time frame. Okay, you want to see some type of alignment. You want to see alignment between the daily and the 4-hour. Now, on the 4-hour, I can obviously see that as my 4-hour supply level, or the last supply level before this internal break of structure, or this internal push to the downside. Now, notice how this level here is taking out not just one level of supply around here, but two levels of supply around here. Now, this is internal break of structure, and this is external break of structure, both caused by this supply level here. So this is 4-hour supply level. Okay. Now, again, you want to go down to either the 2 hours time frame or the 1 hour time frame. It depends on what you're comfortable with. And again, I can see this as my 1 hour supply level. So this is the point where the daily, the 4-hour, and the 1 hour all meet. So this could be my point of entry, guys. This could definitely be my point of entry. Okay. So for GBPUSD, that can be a level you can look to sell from. Funny how GBPUSD is looking a lot cleaner than EURUSD right now, even if they are quote unquote correlated pairs. The reason why I'm saying quote unquote is they fall out of correlation sometimes, so they're not always correlated because we have seasonal tendencies that can lead to EURUSD and GBPUSD breaking out of their very sweet correlation. All right, so this could be an entry on GBPUSD. A clean 1:5 risk to reward trade right there. Let's see how that develops as well. All right. So this is all I'm going to be talking about in this particular video. I've shown you guys BTC, I've shown you guys EURUSD, and I've shown you guys GBPUSD as well. Now, what you want to do is you want to join my Telegram channel because as the week develops, I'm going to be giving you guys updates on these pairs. And I'm going to be showing you guys more precise entry as the week develops. Okay, so if you enjoyed this video, of course, like the video, comment one thing that you learned from the video, and of course, subscribe to the channel as more videos like this are going to be coming your way. Without any further ado, I'm going to see you guys in the next video, man. It's gang gang.